Hi guys, this is an impromptu mid-month update based primarily on Noversight, but I thought I'd start with showing you the portfolio, which is not looking too healthy at the moment, just avoiding being 10% down since inception, and likewise fractionally below 20% since the beginning of my year, which was the 1st of April, nearly 2 months ago. I'll maybe come back to that, but just wanted to give you a picture of it so you can look at it. But primarily want to talk about Noversight, which is now residing at not an all-time low, but a recent low of 357. So let me just give you my comments on it. Yeah, there we go. Turn the microphone around. There we go. Right, so it's really been based on three RNSs, which have all been perceived bad and probably in reality are all bad. The first one was in January, and it was essentially the results. And the results actually were very good, but I think primarily private investors, probably such as myself, were building in too much expectation. Now, the results actually produced circa 300 million revenue, but some in the market were thinking, it's going to be double or even treble that. And it produced nearly 100 million of cash. Not much of that apparently was based on the DHSS contract. So we don't know the exact amount because they haven't released it yet, but maybe a third at most. And because we know they picked up sort of 20 odd million in November. But then we had and that essentially took the price from the lofty £12 regions down to £7-ish, which was a real gutter, to be honest. Then we had the notification of the RNS in April, which essentially said that there was going to be no second contract with the DHSS. More than that, it said they were actually in dispute, although they thought they had a good case to enforce their contractual obligations, and that the Q4 earnings could be materially impacted, and the growth of 2021 will be lower than the market expectations because there's going to be no more DHSS. They also said that they already had enough ProMate and the Q16 and Q32s to do them for the rest of the year. So that then, understandably, tanked the market. It went from then sort of the £7 region down to the £4 region, which also hurt. Now, I was buying quite a lot in the fours. It actually went into the threes as well, bought some there. And then we had the good news that came in, it interspersed, and that when they came out with all the new tests and all the new contracts that they were entering into, and all the new products they had coming up. This is all in RNS, so I won't go into the detail. And it shot up to about 570 and then trickled back down. So I did a lot of trading in there, actually made sort of some trading profits, but ended up with a shed load more, which is always my intention. And then yesterday we had the what first looked a fairly sort of strange RNS, because it seemed at first glance to reiterate what the second one had said, but on closer inspection it was essentially telling the market that the dispute was ongoing, and that instead of just being Q4 revenue being impacted from the DSS, it was now going to include Q1 2021. So that pushed the market price down from 4 down to 350, and who knows, it could go a bit lower on Monday. Now, needless to say, I've bought in this region, so I fully expected to go back up, because they still have the 100 million, and they actually made 36 million in the first quarter in revenues, which excluded the DHS. So if you assume they're getting nothing from it, then that's what they're making. The product is growing for sure. It is gaining traction everywhere. You can see that in all the releases that get found out on Twitter and all the announcements that come out. So if you multiplied that 36 by 4, you'd come to 150 million if there was no growth. Now it seems they burnt the bridges with the DHS. So all the stock that was presumably sitting there waiting to be deployed there, will now be available in the open market. So I think it's unrealistic to think that that 36 million is not going to be bigger in Q2 and Q3, etc. And you have to take into account that now they can sell at a higher margin with no discount, because they were selling at a discount into the DHS. Now the DHS seems to have reneged on the contract. And the important bit of the last RNS was that, having taken legal advice, they think they have a strong case to pursue their contractual obligations. So that's going to be ongoing. Quite possibly, it won't get resolved in 2Q, maybe not in Q3. I mean, the DHS have done this to two other companies, one called Ecologic and one called Abingdon, I think. And I think there was another one as well. And same thing happened, basically, and they ended up paying those, so I fully expect the payment to be coming through. So I don't think it's sort of revenue that's gone. I think it's revenue that'll get delayed. Now they may well settle out of court for some sort of number which is acceptable to them. Now there was lots of bad press because of the tweet, and poor old Graham's coming in for a lot of crap. And personally, I've seen his style all the way through. He's not been releasing figures predominantly to do with the DHSS, I think. So maybe that will change going forward. I don't know. But keeping your powder dry and being able to charge each customer as much as you can is a key business component. So I think that's what he's doing. So I put out a tweet yesterday in which I said something along the lines of, I believe in Graham. I think he does what is best for the company, not what is best for the shareholders. But that we, the shareholders, will reap the rewards in due course. And I'm topping up because I can't see the negative case now. Just looking at the screen now, market cap at 357 is 252 million. Now, we're pretty sure they've got somewhere approaching 150 million already in the bank, because they had 100 or so at the beginning of the year. They've got the results of the net amount of the 36 million, supposedly making 400,000 a day. But anyway, let's call it 125 million. So that's a conservative estimate, I would say. So that's half the market cap they've got in cash, and the almost guarantee of producing more of the other half over the course of the next year at least. So they'll be running on zero basis, and it's a growing business. It's not just a COVID play. Primarily, yes, but not just. Now, also this moving away from the DHSS, in between, in the good RNS we had in between side, it mentioned that the Microgen and Primer Design, which are the two primary companies in the Novasit stable, they are now on the government, the framework, the NHS framework. So they can now deal directly with hospitals and local NHS. So the people that know what they do, the people that know the value of their tests, rather than these strange non-working Chinese ones that apparently the government's buying hand over fist, the people at the sharp end are able to deal direct. Now they've employed shed loads of people. They're still got lots of job adverts open that, and they wouldn't be doing that if they were sort of not making money hand over fist. So they're you can expect direct orders. Now whether those will get RNS, I don't know. As I say, I think he's running the business on the basis of what's best for the company, not what's best for the shareholders. Which I know I got some negative responses to the tweets. Got some more positive ones actually, but that's the way to do it. At the end of the day, that's what he's really there for. And if he does well for the business, then by definition, the shareholders will do well too. So the other positive side of it is the myriad of partners that we've got out there, and companies that are doing tests, whatever they're charging. If they're charging too much, it's not our fault. They're doing these tests and they are using the Novacyt equipment. So their tests are out there. There's been 2 new partners announced recently, and there's hundreds of them. They're all now. I mean, and a lot of them are involved in the fit to fly tests, which in the UK is probably going to provide a significant amount of income, because the markets are opening up there now. People will be going on some form of summer holidays to some form of countries, and all these tests will be needed. So I'm hopeful that that will come through. Now, there could be short-term pain for sure. And believe me, if it goes down on Monday, which, it's probably 50-50 chance it will, then I will be topping up at the lowest. I mean, the lowest I got, and I think I bought 4, if not 5 tranches on Friday, yesterday. The lowest I got was 361. So I got actually 6 accounts that I trade for. So I'm confident, even on a cash basis, that it will be double that. I need it to double to get my money back, frankly, although my average is coming down. My average is now 657, but it's £3 below my average. And I will continue to trade. That's why I'm happy to keep buying more at these low levels. And, if it went up to 4, I'd probably sell one of the pots that I bought in the 360 region, just to recoup a bit of trading profit. Because trading-wise, I'm actually only down, or is it 34%? So, whereas I'm down 45, 46% in terms of what I'm currently holding. Okay, I'll shut up there. I might come back with another one, because the other stocks that I think you should really look out for, 4D Pharma, they're presenting today in America, so it's probably tomorrow here in Thailand, and this is on their irritable bowel syndrome, Blautix biome drug, and they've got a investor presentation on this, which is new data from the previous study, which they always said the previous study was good. It's just the market perceived that it wasn't as good as they said. They've got new data which is coming out, I think, on Tuesday. Not sure what time, but there's an RNS out there. So, I ticked up a little bit on Friday. It's also quite low stakes as well, so worth watching. Deep Verge is, that is going to be the star of the show. It's currently at 35. I'm actually making a profit on that one at the moment. They're everywhere. But also Tech Capital. If you haven't heard of it before, check it out. Tech Capital, they have 4 companies. They've actually got 5 companies in there. They're an investment group that invest in university technologies. They've got a reporting arm that does well, but their main claim to fame will be from the investments that they have in these other companies. Now, they own 3 of them pretty much outright. The 4th one, which is going to float next Friday, it's called Bellascura. It makes portable oxygen transporters, so in a sort of small, so people with CPD can climb mountains with one of these things in their backpack, and it converts air into 95% oxygen. So they're floating to provide enough money to produce these things. If they can get them out quick enough, they'll be able to sell shed loads in India, for example, and other unfortunate places that are suffering from the current pandemic. And there are 3 other elements in which I won't go into now because I've not got time on this one, but that one, as I say, next Friday, that is floating. Tech Capital, their market cap is 19 million. Their stake in that flotation, if it floats and stays flat, which you'd expect it would go up, but if it stays flat, then that is worth 7.7 million to them. So almost half the market cap is redeemable in that one share. If it happened to go up, if it doubled, well, whatever. And of course, Tech is 15 million with just under 20 million market cap. So well worth. Now, I want to talk about all the rest as well. So maybe I'll come back next week and do the other bit, but I'm almost 14 minutes, right? So I will shut up now. And if you want to make any comments about Novasit or anything else on there, I will happily respond to them. And if you want to message me direct, I think you can do that. Very happy to engage in conversation and give out my email and all that sort of stuff. But anyway, good luck and roll on Monday. Oh, just in a nice little face from the men behind me there. Yes, see the rest of him? There we go. Yeah, little nephews. Anyway, okay. Cheers, guys. Bye-bye.